We are now in our 5th year of doing Apart Market Dynamics videos, and if there's one thing we've learned about our viewers over these years is that you all love a good list. And so by popular demand, today we bring the rent growth leaderboard as of Q3. And with that, welcome to Apart Market Dynamics from MPF Research. I'm Jay Parsons. He's Greg Willett. And Greg, in our last episode, we talked about how rent growth was continuing to reaccelerate for the U.S. apart market overall. For the core 100 metros, same-store effective rent growth for new leases measured 3.7%, a 9-quarter high. And so, Greg, with that backdrop, let's kick us off with starting off with the list.
Well, it's interesting to look at the list this time. I think there are probably some surprises on here, but they're not at the very top of the list. Looking at who is really right at the top, the 4 metros we seem to talk about over and over again, the 3 Bay Area spots and Denver right up there at the very top of the list. Oakland is in the #1 spot with effective rates for new leases up 9.1% on an annual basis. It's a hair ahead of the 9% annual rent growth we see in both Denver and San Jose. And then in that #4 spot, we have San Francisco with rents up 7.4%. So a little bit of a gap there, but still right there toward the top for San Francisco.
And Greg, you mentioned some surprises, and let's start off the next one, #5, which is Atlanta. Maybe not a surprise that it's on the top 10 list, but a surprise that it's this high at 6.4%. Now this is your classic late recovery story, with Atlanta just now enjoying an initial run-up in rents that some other markets saw earlier in the cycle. So very different from the re-acceleration story that's playing out nationally. But if there's a surprise here, it's that the rent growth number in Atlanta just keeps getting higher and higher. 6.4% now versus 5.5% a quarter ago, 4.3% 2 quarters ago. And it's been driven by big hikes across the metro, including in some high vacancy areas. #6 on the list is Seattle. Another pleasant surprise similar to Denver, where big rent hikes continue even as new supply is reaching long-time highs. As of Q3, annual rent growth in Seattle registered at 6%. And 3 more metros that are registering rent growth above the 5% mark. They are Portland, Sacramento, and West Palm Beach. Not a lot of common threads between these 3 spots, but the oddball in the group is obviously Sacramento, another late recovery market like Atlanta, which is enjoying a nice run right now. Sacramento joined the rent growth leaderboard last quarter, and at that point we kind of wondered if this was a blip in the data that wasn't going to be sustained. But it appears that Sacramento may have some staying power in the list, at least for the short term.
And let's jump to, we have a tie for the #10 spot on the national rent growth leaders. One of these markets you would certainly expect to see on the list, and that is Houston. The real shocker on this list, and let's go beyond, it's a little surprising too. It is really shocking to see this one on there. Las Vegas ties with Houston. Both of these markets experiencing 4.6% annual rent growth. For Las Vegas, really all of this rent growth has occurred just within the past 2 quarters. So some really, really strong momentum starting to emerge here. But let's be realistic about Las Vegas. I mean, it is the one place across the country where rents are still well under the pre-recession level, so big hole to fill in, but we are starting to move in the right direction and move there pretty sharply.
Yeah, and to your point, I mean, the one spot was still a big hole, and even with that big rent hike, they still have rents below 10% of where they were prior to the recession. So very significant hole still to make up in Las Vegas. Let's keep going though. A bunch of metros are recording annual rent growth in the 4 to 4.5% range, above the national average of 3.7%. We can't go into all of these stories here, but we'll give you the list. San Diego, Fort Lauderdale, the Riverside, San Bernardino area, Austin, Orlando, Los Angeles, Fort Worth, and Nashville.
So lots of good performances. How about the ones that are weak? Last time we talked about this topic, we highlighted that the 2 weakest markets in the country for rent change were Virginia Beach and Raleigh, and those both actually did reasonably well well in third quarter. And Virginia Beach went to a slightly positive number. On an annual basis now, rents up 0.6% in Virginia Beach, and a really, really good quarter for Raleigh, actually. Very solid rent growth for the quarter that took the annual change number solidly into positive territory at 1.7%. So with those two improving, we have new metros at the very bottom of the list, and maybe frighteningly, they're markets that have a lot of real estate dollars invested there. And New York is positive on annual rent change by the slightest margin possible. Effective rents up 0.1% year over year. And Washington, D.C., struggling to get all that new product through initial lease up. Annual rent change actually slightly negative at minus 0.1%.
So some very interesting results, and it's been really interesting to see the shuffling that's occurred this quarter on the rent growth leaderboard list that's starting to occur in part because of the construction hitting the market and also some of the late recovery stories that we're seeing. And the list should continue to see some shuffling next quarter as we're going to see a lot of new supply completing in Q4. That's going to affect some of the results, and we're going to be talking about that in a video that's going to come up next week. But until then, that's going to wrap us up for today. So for Greg Willett and for MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.